This is video 1 of Audible, a question that came from Year Test 2 in 2018. If we look at the given information, Audible is a seller and producer of voice audio entertainment, information and educational programming on the internet. Through its production arm, Audible Studios Audio has become the world's largest producer of downloadable audiobooks. Audible's content is only accessible through special proprietary closed software, which includes unauthorized playback prevention based on an Audible username and password. In addition to the normal price, which is approximately 140 Rand charged for audiobooks, Audible offers a monthly subscription of 120 Rand, where a customer receives 1 audio credit per month. Most audiobook titles can be purchased with one of these credits. The credit rollover limit is a maximum of 5 credits. So on 24 November 2017, Audible held a Black Friday promotion related to this monthly subscription that is usually 120 Rand, and then they get 1 credit per month. In terms of this one-day promotion, subscribers would be entitled to a 10% discount on the monthly subscription when entering into a non-cancelable 12-month contract payable via a monthly debit order. The subscription will commence on 1 December 2017. In terms of this one-day promotion, the customer will also immediately receive an Amazon Echo Spot for free. Usually the standalone selling price is 1,040 Rand. The Amazon Echo Spot can be used with any other readily available resources. On 24 November 2017, 10,000 subscriptions were recorded for this promotion. Audible correctly identified 2 performance obligations relating to this promotion, namely the supply of the Amazon Echo Spot and then the supply of the audio credits. During November 2018, so that's now a year later, the accountant of Audible realized that the transactions from that promotion that happened last year, 24 November 2017, had been incorrectly accounted for by the accounting system. So what are they telling us? There was a prior period error. The accounting system had processed only the following journal entry for each month of the 12-month subscription period, beginning with December 2017. So what was processed? Debit bank, 1,200,000 times 90%. Then there was a debit to a promotion expense, the 1.2 million times the 10%, and the revenue was 120 Rand, which is your subscription price, times the 10,000 subscriptions, and that is the 1.2 million. Now the question is, revenue is the amount that you think you will be entitled to. Will you ever be entitled to the 120 Rand? No. Those 10,000 people that subscribed on the day of the promotion, every single one of them received 10% discount. So they will never pay 120 Rand a month. They won't. So you will never be entitled to 120 Rand. Further, this does not take into account that an Amazon Echo Spot was provided, that there was a second performance obligation. Audible correctly identified 2 performance obligations. Revenue should be recognized for each performance obligation when that specific performance obligation is satisfied. Where's the revenue from the Amazon Echo Spot? Just because we gave it for free, does that mean there is no revenue? Okay, so further investigation revealed that none of the customers from this promotion had purchased any audiobooks by 31 December. But that's only the first month. Remember, the subscription started in December. So at the end of December, they didn't use any of the credits. They didn't buy any audiobooks. But you have a 5-month rollover of those credits. So you don't have to buy the first month. And nobody did. Audible's reporting date is 31 December. The financial statements are authorized for issue annually on 30 April. You may assume that Audible applies all practical expedients available to them in IFRS 15 and allocates all payments between performance obligations proportionately. Practical expedients is a term that you would have seen in IFRS 15. It's where IFRS 15 makes the accounting, the recognition, and the measurement a bit easier. And there's specific rules of when a practical expedient can be applied. If we have a look at the required, disclose the prior period error note using the above mentioned information of Audible for the year ended 31 December 2018 in accordance with IAS 8 accounting policies, changes in accounting estimates and errors. Then there's a note, important to read because it limits what you need to do. The accounting policy note is not required. Assume all amounts are material, round final calculated amounts to the nearest rand, round percentages to 1 decimal place and ignore all taxation implications.